This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Yeah. Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money.
Well, John Forwood, thanks very much for coming back on Talk Your Book. We had you on here probably about 6 months ago speaking about PDI, which I think has been a three-bagger since then. So a lot of interest in you coming back on, and thanks for taking the time.
Chris, thanks for inviting me back. Really enjoyed it first time around, and lucky enough to pick Predictive at that point. And it's now the biggest holding. It's the biggest holding in our fund, and we haven't sold a share, and we're expecting it's got a couple more legs to it.
And it was a big year last year for Lyle Resources Fund. Maybe we'll give you the opportunity for a humble brag here, because you did have a great year. What did you guys do last year in terms of returns?
Yeah, look, on the financial year, we're up over 40% to 30 June. June, it's a bit of a double-edged sword in terms of having a rule off for the financial year, because it's generally a soft. We go into the Northern Hemisphere summer period, and things get soft in junior resources and elsewhere, I guess. But we were up even further back in May. But we're very happy with that performance. And since June, July has been good for the junior resources sector. It's kicked on, and so the funds started the financial year pretty well.
And what stock did you want to talk about today?
Look, it's a stock that we've been in for some time, called Caravel Minerals. Classic West Perth junior with a project in Western Australia, which has got a lot of benefits at the moment, given the COVID restrictions and travel. And heavily exposed to the copper market.
So we'll dig into Caravel in a second, but maybe before we get into that, if we just have a helicopter view of the copper market more broadly. A lot of the viewers and listeners will be familiar with the EV thematic, but also renewable energy and how heavily those two things use copper. Do you want to maybe just explain for the people why copper usage is going up so much in a bit more detail, and maybe what's happened to average grades mined around the world in the last 10 years?
Sure. Look, it's widely known that the intensity of copper usage in an electric vehicle is at least 3 times what you would see in an internal combustion engine. And I don't need to talk about the global moves towards EVs. Almost every vehicle manufacturer is moving from internal combustion engines to electric vehicles, some a lot faster than others. So that thematic is very strong. And look, while battery chemistry is a bit of a moving feast, lithium is obviously dominant at the moment, and will be for a number of years. But there's so much research and work going on into different battery chemistries that picking the battery chemistry that will be dominant in 20 years, let alone, maybe next 10, is virtually impossible. So copper is a very good way to play the decarbonisation, electrification theme. So that's the demand side. On the supply side, look, there's near-term restrictions on the market, which are, both political and economic, if you like. The two biggest producers by nation are Peru and Chile, and they're both going through a lot of issues at the moment, ranging from just, ongoing industrial relations action, through to the threat of huge increases in royalty rates and fiscal impositions on the mining industry in those countries. So we're seeing the potential and the actual restriction on supply right now. We're also seeing things like just anecdotally, I read yesterday that there's an issue with bandits in Africa stealing copper being shipped out of places like the Congo and Zambia. Zambia is 10% of global copper supply, and metal traders are the ones who really do the heavy lifting in terms of getting copper from the mines to the markets, and they're being subject to their trucks being hijacked, copper stolen. That's just an indication of where the copper price is, that it's worthwhile to do that and take the risk of doing that. So there's all these factors at play that underlie a strong copper market right now, and for the foreseeable future as well.
And so talk me through Caravel's core deposit. What size is it, and what's the grade maybe as a starting point?
Yeah, so it's a big, low grade project. So it's got over 600 million tonnes of resource at a grade of 0.28% copper. So that is, that's definitely low. So you need to look at other factors which will potentially make that project, economic. And there are a number of those that, while the headline number looks and is low, there's a number of those factors which actually make this project a real, a great lever to the copper price. And while we expect the copper price to continue to move up, at today's copper prices of around $4.30 US a pound, that project is on paper is a screamer.
And some of those other factors, maybe we'll start with the strip ratio and the fact that it is potentially to be an open pit mining operation with a homogeneous ore body that's potentially pretty easy to mine. Do you want to walk us through those two issues?
Yeah, exactly. So it's a nice, thick, consistent ore body. It does have a layer of unmineralized cover on top, which I think is about 30 or 40 meters thick. So they're going to need to move that, but that will be free dig, I expect. I.e., you don't need to use explosives. It's not hard rock. You just be able to excavate it with a standard excavator and move it. So that will contribute to the strip ratio. But once you've got that off the top, and that's a very common thing to these days, to have to deal with a deposit that's undercover. Most new discoveries are undercover these days. If you look at say the big Hemi discovery in the Pilbara, that's under about the same thickness of cover sands. So get rid of that. But then the strip ratio, look, who knows what it'll end up being, but it's going to be low, 2 or 3 to 1. You could possibly envisage it getting down to that sort of level. And I think you're talking about the economies of scale. So if you're talking about 30 million tonnes per annum of ore being mined, you're talking about moving, a total volume of material of maybe 100 million tonnes. That's a lot, but it does generate, economies of scale and drives down the per ton mining cost. And because it's a deposit which is not, a whole lot of little narrow veins that need to be mined with a teaspoon, it's a really nice thick, zones. You're getting, 100 meters in the thickest, plus 100 meters thick, running sort of 0.3, and some of those zones that they're drilling at the moment, getting results of sort of 0.5% copper, which for them is high grade. Those beautiful thick zones, which will be hopefully converted into ore, that's very much bulk tonnage mining, and the lowest cost mining you can, apart from maybe longwall strip mining for coal. This is pretty low cost mining.
And there's the potential then to increase the resource even from where it's at now?
Yeah, look, certainly some of the results that they've been getting indicate that they'll push the depths of the potential open pit to beyond 450 metres below surface, and that's a big open pit. Most of the operations, in WA probably, they might average 200 metre deep open pit, so that's a deep open pit. Then they've been drilling out their resource, on the west zone, but they've also got an east zone which really hasn't seen much recent attention, and that will add hopefully to the resource when they come to drill it in the second half of the year. And then they've got a number of other satellite deposits which also haven't had a lot of drilling of late, such as Dasher along strike. So that will also, as I understand it, get drilled, over the coming Australian summer. So there's a number of potentials to push this deposit. It's currently got about 1.8 million tonnes of contained copper in the resource. Certainly the hope is that they'll push it through 2 million tonnes of contained copper.
And what sort of life of mine do you think it'll end up having once all the drilling is complete?
Yeah, look, they're talking about a 30-year life of mine, which is, that's the sort of mine life that attracts at least the mid-tier miners. Probably not something that the majors like BHP and Rio would look at, but certainly the mid-tier guys, that's, if they can, see a mine life of plus 10 to 15 years, that's what gets them excited. So 30 years is, that's a generation really, isn't it?
And what's its current market cap?
They're trading around about $140-150 million market cap, and the quarterly will come out today as we're speaking, but I think they've probably got around $7 odd million in cash.
And the capex for the project is forecast to be somewhere around 500 million. Is that right?
Look, they did a scoping study. When was that? That's a couple of years old now. And the capex was, around there. But certainly we have seen capex and opex inflation in the mining industry in the last couple of years. So, I would expect, what we're seeing in the mining industry is maybe, in that period, we've seen a 25%, increase in capex and opex, and they will have, scoping studies are always got a fair bit of, plus or minus sort of 50%, if not more. So as they sharpen the pencil, and the PFS is being done at the moment, expected to be out early next year. As they sharpen the pencil, usually those numbers creep up a bit anyway. So you could see a capex that's pushing closer to $1 billion rather than closer to 500 million.
And so, with a market cap of that size and the capex that's potentially coming, will they definitely need a funding partner, be it a big brother resource company or an overseas funding partner, or do you think there's the potential that they could go it alone?
Look, I think, what we always like to see is companies maintaining the option to do it themselves, because they put all their eggs in the, we need a partner basket, then they're sort of losing their negotiating power. So, look, $150 million company contemplating, maybe $1 billion funding requirement, that's a tough ask. But then if you put it in the context of, well, what's this project potentially worth? And, the scoping study was done at $3 a pound copper. We're currently at, $4.30 odd a pound copper. If you put those numbers into, the scoping study, spreadsheet, you get an NPV, which is, at least 10 times their current market cap, and probably well north of that. So while there's been cost increases, you certainly more than compensated for that with the price of the commodity. So look, not impossible, a big ask. What you can see, and companies like Gold Road are a good example of how to play it. They went down both those parallel options of doing it themselves or bringing in a partner. They ended up with bringing in a very experienced South African miner for their gold project. Ended up with 50% of the project and kept all the exploration potential around it. Now we would actually expect Caravel to do better than that in terms of. We'd certainly hope that they would maintain majority interest in the project and bring in a funding partner. And if you look at say the Japanese, which I'm sure they're interested in that project. If you look at how some of the big Japanese conglomerates participated, 30 years ago, 40 years ago in the iron ore projects in the Pilbara in Australia, they provided funding and took a sub 20% stake typically in these projects, and this project would be attractive to those sort of groups because of its long mine life.
And what about? I mean, it's not a huge thing, but director selling shares recently, it was a small amount. I think it was about $40,000. As a fund manager, are you able to look through that? Do you investigate it much? Or if it's not a huge amount of their shareholding, do you not take much notice of it?
Yeah, look, it's always a negative. There's no question, Chris. But look, that's not a particularly significant amount, given that directors hold around, around 9%, or management hold around 9% of the company. So that's really a nice chunk. It's actually quite rare to see management have that big a stake in something like this. So we take a lot of heart from 40 grand is small beer when you compare it to the overall holding.
And for retail investors or small investors perhaps that aren't across detail as much in the resources space, do you think they get put off by the low grade of this deposit and without really investigating the metallurgy and the easiness of it to potentially mine one day? Is that where the opportunity lies compared to other companies with maybe a much sexier headline grade of copper?
Yeah, look, I think that's definitely right. Although we got in, the fund invested in Caravel at 4 cents a share. It's been a 10 bagger for us. And normally, when we, have a 10 bagger, we've got itchy fingers and looking to sell. But this, given the NPV of the underlying project is an order of magnitude higher than the current market cap, we think this has got, plenty more upside to it. So, look, I think when the PFS comes out, hopefully early next year, and it's being done by a very reputable engineering firm called Ausenco, who've built a huge number of projects all over the world. So it should be something that that document should be something that investors can really rely on. When that PFS comes out, and hopefully, Chris, shows confirms the value that the scoping study indicated, I think that'll be another piece of validation for investors to get some confidence from.
Terrific. Well, it's very hard to get some clean copper exposure on the ASX with the majors having so much exposure to other metals. So it's a great one to have on the watch list. And thanks very much for coming on again, John. Oh,
Chris, pleasure to, as always. And look, we hope that Caravel, people might like to have a look at it, and we've got high hopes for it.
Thanks, mate. Appreciate your time. This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.